Good morning folks, this is Naeem Alsam, Chief Market Analyst at AvaTrade. Happy Friday and welcome to our daily fundamental video. And most of all, thanks ever so much for watching our videos throughout this week. I cannot thank enough for all of that. Well, speaking of Friday, today is the US non-farm payroll day. The most important economic number. In fact, it is called the mother of all economic numbers. Why? Because it is likely to amplify volatility for stocks, for bonds, for Forex, and of course for the commodities as well. So at 1:30 p.m. UK time, you are going to get this data, and the forecast for the US unemployment rate is at whopping 19%. Folks, it wasn't too long ago when the US unemployment was well under 4%, under 5%, around those levels. But now we are speaking of 19%. Imagine when that fear-mongering headline prints, how the equity market is really going to react. Because right now, looking at the European equity markets, what I see is a positive momentum. Investors are building on this particular sentiment that yes, the ECB is holding their back, and it is going to pump more money into the system through its dovish monetary policy. At least that is what we learned from yesterday's ECB monetary policy. Hence, as you can see from the chart, the DAX index is moving up and the momentum, it looks enormously solid. There is no evidence of any abysmal or dismal price action when we look at the DAX index today. However, this can change when we get that US NFP reading at 1:30, like I said before, because investors are likely to react, and what is going to happen on the back of that, or what is likely to happen, shall we say, is the speculators will increase their bets against the dollar because they will expect the Federal Reserve to push the interest rate even more lower, below that critical territory of zero, something that Donald Trump has always advocated for. He's always voiced his concern that why interest rates in other territories such as Eurozone and of course in Japan, they are well below zero, and why our interest rates are not competitive. Also, what is quite important is that if the US unemployment number comes at 19%, all those hopes around second round of stimulus check over in the United States, they will once again gain more momentum, and the likelihood of that becoming reality is also going to be a lot more stronger than what it is right now. But what if that number of 19%, the unemployment rate 19%, which is the forecast for today, if we do not get that number, what if we get a number lower than that? What if we get a number somewhere between 15 to 18? Well, let's just say anything which is lower than 19 is going to be perceived as a positive sign for the equity markets, and they are likely to roar. They are likely to continue their journey to the upside. You know, the Dow Jones futures, as you can see in the chart, they are already trading positive. In fact, the Dow is up whopping 250 points as of now. And if the unemployment rate comes lower than the forecast, this rally is highly likely to continue, despite some valid concerns about valuations and about where the recovery is in the real economy and how that V-shaped recovery is shaping up in the equity market space. That's all for today, folks. See you guys next week, and have a wonderful weekend.